All right, folks, listen up. You want to make some money? You want to get in on the action? Investing is where it's at, and today we're talking about a name everyone knows, Netflix. Why Netflix, you ask? Because it's a company that changed the way we watch TV, movies, everything. It's a disruptor, a game changer, and its stock, ticker symbol NFLX, has been on a wild ride, making some people very happy and others, well, not so much. But that's the stock market for you. It's a thrilling arena where fortunes can be made if you play it smart. It's not just for the Wall Street bigwigs, it's for. The stock market, my friends, is like the biggest shopping mall in the world, but instead of buying sneakers or a new phone, you're buying tiny pieces of companies. These pieces are called stocks or shares. When the company does well, the value of your piece can go up. Booyah! That's the dream. But, and this is a big but, it can also go down. That's why we do our homework. Netflix stock, or NFLX stock as the cool kids call it, is a popular one because it's a growth story, a tech titan, and it's always in the headlines. People love the shows, and they love to talk about the stock. Now, why should you, a beginner, even think about buying Netflix stock? Because understanding how to invest in companies you know and use can be a fantastic way to learn about the market. It's about taking control of your financial future. It's about not letting your money just sit there doing nothing. You work hard for your money, right? So, make your money work hard for you. We're talking about building wealth, piece by piece, share by share. And Netflix, with its global reach and constant innovation, presents a fascinating case study for any aspiring investor looking to understand the dynamics of the modern economy. But hold your horses. Don't just jump in blindly. That's a recipe for disaster, a one-way ticket to Palookaville. Before you even think about clicking that buy button for Netflix stock, you need a plan. You need to understand the basics. You need to know where to go, what to look for, and how to protect yourself. This isn't a casino, even though sometimes it feels like it. This is about making informed decisions. Stick with me and I'll show you how to navigate these waters, step by step, so you can decide if buying NFLX is the right move for your portfolio. Let's get to it. First things first, you need a place to buy and sell stocks. This is called a brokerage account. Think of it as your personal gateway to the stock market. There are tons of brokerage firms out in the world today, many of them online, making it easier than ever to get started. Look for names like Fidelity, Charles Schwab, Robinhood, or E*Trade. Do a little research. See which one feels right for you. Check their fees. Some have zero commission on trades, which is fantastic for beginners. You want a platform that's easy to use, has good customer service, and provides educational resources. Don't be shy. Shop around for your broker. Once you've picked your brokerage firm, opening an account is usually pretty straightforward. It's mostly done online. You'll need to provide some personal information like your social security number, if you're in the US, your address, and some details about your financial situation and investment goals. It's like opening a bank account, but this one is for your investment journey. They need to know who you are. It's all part of the regulations. It might take a day or two for them to approve your account, so be patient. This initial step is crucial. Get it right, and you're on your way to potentially owning a piece of Netflix. After your account is open and approved, you need to put some money in it. This is called funding your account. You can usually link your bank account and transfer funds electronically. Start with an amount you're comfortable with, money you can afford to invest, and I mean to potentially lose, especially when you're starting out. The stock market has ups and downs, remember? Never invest your rent money or your emergency fund. That's a cardinal sin in Cramerica. Start small, learn the ropes, and you can always add more later as you gain confidence and knowledge. This is your seed money for your investing adventure. Now, for the exciting part, checking the Netflix stock price. Once your account is funded, you can use your brokerage platform to look up any publicly traded company, including Netflix. Its ticker symbol is NFLX. Type that into the search bar and you'll see the current price per share. For example, earlier this year, around January 2025, Netflix stock, NFLX, was trading around $842.37. Prices change constantly when the market is open, going up and down based on supply and demand, news, and overall market sentiment. Watching these price movements is part of learning how the stock market breathes. It's dynamic, it's fast, and it's where the action is. Alright, you know how to find the price. But is it a price? Is Netflix a buy, or should you say bye-bye? This is where your homework, your research really kicks in. You wouldn't buy a car without checking under the hood, would you? Same with stocks. One of the most important things to look at is Netflix's earnings reports. Companies usually release these every 3 months, and they tell you how much money the company made, how many subscribers they have. Though Netflix is changing this reporting from 2025, and what their outlook for the future is. These reports are gold for investors. For instance, when Netflix reported its Q4 2024 earnings back in January 2025, analysts were expecting them to earn around $4.20 per share on sales of $10.12 billion. They were also watching subscriber additions closely, with Wall Street hoping for about 8.2 million new users. These numbers give you a snapshot of the company's health. Did they beat expectations? Did they miss? This news can send the stock soaring or tumbling. Understanding these reports is key to understanding the NFLX stock story and its potential future trajectory in the competitive streaming landscape. Next up, you gotta look at what the so-called experts are saying, the stock predictions and analyst ratings. Wall Street analysts spend their lives studying companies like Netflix. They issue ratings like buy, hold, or sell, and they set price targets, which are their predictions for where the stock price might go. For example, earlier in 2025, BMO Capital Markets had an outperform rating on Netflix and raised their price target to a whopping $1,000. Wedbush Securities also had an outperform rating with a $950 target. But remember, these are just opinion, educated guesses. No one has a crystal ball, not even me. Use these as one piece of the puzzle, not the whole picture. Don't forget to look at the stock's history. How has NFLX stock performed in the past? Well, 2024 was a banner year, with the stock surging 83% to $891.32. But then, at the start of 2025, it took a little breather, down about 5.5% by late January. The stock market isn't a straight line up, it's a roller coaster. Look at 2022 when it fell 51%, then bounced back 65% in 2023. These patterns, these ups and downs, tell a story. Understanding this history helps you prepare for the volatility that can come with investing in a high-growth, high-profile tech stock like Netflix. It's about perspective, baby. So you're armed with brokerage info, price data, earnings reports, and analyst chatter. What else should you be digging into? You gotta keep an eye on Netflix stock news like a hawk. What are the big stories affecting the company? In 2024, the crackdown on password sharing and the expansion of its advertising-supported plan were huge growth drivers. Over half of new subscribers in many regions were picking that ad plan. That's a big deal. Also, watch for price hikes. They recently bumped prices on basic and premium plans. These things directly impact revenue and investor sentiment. Then there's the nitty-gritty of stock analysis. You might hear terms like PE ratio, which is price to earnings. Back in December 2024, Netflix was trading at around 40 times its consensus 2025 earnings. Some folks thought that was expensive, especially compared to mid-2022 when it was around 20 times earnings. Trefis, a financial research firm, even valued Netflix stock around $613 per share in December 2024, much lower than its trading price then. These valuation metrics help you gauge if the stock is a bargain, fairly priced, or maybe a bit too frothy for your taste. It's about finding value. Also, consider the challenges and competition. Netflix isn't the only game in town anymore. Disney Plus is bundling services, Amazon Prime Video is strong, and new players are always emerging. This competition could affect Netflix's ability to raise prices or could lead to higher churn rates. That's when subscribers cancel. And content costs are always a big factor. Netflix is spending big on live sports like NFL games and WWE wrestling. That's exciting for viewers, but it costs a ton of money, and investors will be watching to see if those bets pay off in subscriber growth and engagement, especially since they're stopping quarterly subscriber reporting. Ultimately, deciding whether to buy Netflix stock is your call. There's no magic formula, no guaranteed win. Gather all the information, understand the company, its industry, its financials, and the risks. Are you investing for the short term, hoping for a quick pop? Or are you in it for the long haul, believing in Netflix's vision for years to come? My advice? Start slow, do your homework diligently, and never invest more than you can afford to lose. The stock market can be a powerful tool for wealth creation, but it demands respect and careful consideration. So, get educated, get informed, and then make your move. Booyah! Good luck.